Welcome to Retire Rich, Tales of Financial Freedom with Mark Hernandez and Carlos Lopez from M.A.H. Financial. In this podcast, we guide professionals of all generations, including Gen X, Millennials, and Baby Boomers, to answer an array of questions ranging from building wealth in 401k plans to selecting life insurance policies, including questions about IRAs, dividends, and bond alternatives. So tune in as South Texas's own financial advisors and fiduciaries, Mark and Carlos, draw from years of expertise, interview clients, and share stories of financial wisdom to accelerate your path to achieving your financial goals. Now, on to the show.
Hello, welcome to the show. I'm Dave. I'm sitting here with Mark Hernandez.
Hey, Dave. Good morning.
Puts the M.A.H. in
M.A.H. Financial. That's right.
Today, we're going to be talking about something we had to do our homework on, and that's the big, beautiful bill. I had a recent conversation with my sister. She was concerned about how it was going to affect her and her boys going to college because there's some changes there to the Pell Grant. I don't know where she got her information from, but I just took it upon myself to do our due diligence. I downloaded the bill. I uploaded it into an AI. We had a conversation about it and kind of broke it down. I don't know what she was talking about, but that wasn't in the bill. So I put her at ease talking about that. But how is this bill going to be affecting like our clients that are pre-retirees and retirees?
Well, it's going to affect us tremendously because the biggest thing about this bill is it affects Social Security, okay? It affects Medicare and Medicaid, and it also provides tax cuts. Now, what I feel is that it's going to affect a majority of Americans. It's going to about 88% of the people that are receiving Social Security will get some benefit from that. And it used to be, it was about 64% before. So we need to have conversation with our clients that are already retired and that are already on Medicare, and also those that are going to be retiring in the new future. They need to understand how it's going to affect their income and what kind of strategies they can take that might help them with taxes and their health care costs.
So when I was doing my research on here, I got some questions. Hopefully you can answer them. You've got your notes. Let's see here. So the big, beautiful bill, not to be confused with the Better Business Bureau, right?
Yeah, right.
So we've already touched on, why should retirees and pre-retirees care about it? But what I see in the headlines is that the bill, there's a new $6,000 senior deduction.
Yeah, that's really good. It's not going to eliminate Social Security taxes for most people, but for middle income people that are receiving Social Security, that $6,000 per person deduction, is going to be a tremendous benefit. It can, in some cases, eliminate taxes on Social Security, but also the bill is going to affect their Medicare and also Medicaid. Oh my goodness, Medicaid over the next 10 years, $1 trillion is going to be eliminated from Medicaid. Now, you really don't want to be on Medicaid. I mean, Medicaid, lower income individuals or people that are are not able to work get Medicaid. But those are on Medicare. There are going to be some tweaks to the Medicare, and also what's going to happen, it can affect long-term care costs. Okay, so if they're utilizing Medicare or even Medicaid to help offset, assisted living costs or home health care costs and care, that could be tremendously affected.
So that's health care. What about Social Security?
Well, the Social Security, again, the $6,000 deduction will help. So if you're receiving Social Security right now, that means $6,000 of that income will be excluded from taxes. So again, if you're not paying, if you're not getting a lot of, if your income is not very high, or you're not getting a very high amount of Social Security, that any tax you may be paying could be totally eliminated by that deduction, which is great. Now the thing is that is going to affect middle income Americans and our clients that are middle income earners. But if an individual is making over 75,000 or a couple is making over 150,000, it's going to be phased out for them. Okay, so it's really not going to affect high wage
Earners.
or high earners. It's going to affect middle income people, which make up a majority of this country. So that is a very good thing.
Do you think that might speed up like depletion of Social Security?
Well, the thing is that we've been looking at the Social Security Trust. A lot of experts are saying by 2033 it could be depleted unless we do something. Then that went to 2035. Now we're seeing with these tax cuts, there's a possibility, and if the IRS isn't getting, or Social Security funds trust not getting the revenue they were used to getting because of these tax cuts. They're saying probably, maybe it might cut that down to reduce it by a year. Maybe instead of running out in 2035, it might run out in 2034. Now, that is a concern, but that's we're not in crisis mode on that right now. Okay, so I still feel that these deductions and these tax cuts will help the average American and our average client that you might consider middle income. That will tremendously help them. But regarding the Social Security Trust, there's a lot of things that are going to have to happen in the next few years that's going to be able to shore up Social Security for future. For the people that will be receiving Social Security in the future. But the thing is, these tax cuts and the revenue that will not be coming in from Social Security due to these deductions, it probably is not going to have that huge an impact on the Social Security Trust.
Now, you touched on healthcare, but my understanding, I was going through this, I looked at it, and they were talking about work requirements for Medicaid cuts.
Well, that's true. So what's going to happen regarding Medicaid, that if you're an able-bodied person, there's gonna be work requirements for you to continue to receive those benefits, either Medicaid, my understanding, of course, SNAP benefits, those type of things. Now, of course, for those that are disabled or senior citizens, you just have to make sure you have your documentation in place. So if you're receiving Medicaid right now and you are a senior or you're disabled or not able to work, you better make sure that your documentation is up to date to make sure that you don't lose any benefits. But for those that are able-bodied and they're receiving Medicaid just because they decided not to work or enter the workforce, that's going to change for them. So they're going to have to meet requirements, work requirements, to continue to receive those benefits.
And this bill is also going to extend the 2017 tax cuts.
Yeah, the 2017 tax cuts will be basically, the tax cuts were being made permanent, but these deductions that we're talking about for Social Security, the $6,000 deduction and the tweaks to Medicare, those are going to be expanded or extended to 2028. Okay, so after 2028, those will expire.
There was some kind of hazy wording around some of these Roth IRA conversions and filling up, lowering tax brackets in the document. Can you explain what that means and why it's a smart move to do this filling up?
Well, I'll tell you one thing. If most of your retirement money was 401k or you saved in a traditional IRA or simple IRA, it was pre-taxed, you need to consider looking at converting those dollars into Roth. And doing it, and what we recommend, doing it, it's kind of hard to do it at one time, because if you do it at one time, the tax cost would be prohibited, put you in probably the highest tax bracket. But if you can strategically work with your advisor, and what we do is we have conversations with our clients and talk about programs that we could implement to start converting their pre-tax money to Roth. under today's tax environment because, like I said, the tax rates were extended that President Trump did in 2017. They were going to expire in 2025. Those have been those were supposedly made permanent, but my understanding is also 2028 is a key year. So the thing is that we're having conversations that if you're concerned about when you start receiving your distributions, taking distributions and receiving distributions from your retirement money and pre-tax money, that it's a good idea to look at Roth conversions and start doing a little at a time. And that way the tax burden wouldn't be as severe. And those are things that we highly recommend to take advantage of these tax cuts at these times. To go ahead and maybe look at your pre-tax dollars, convert them to after-tax dollars, and once they're converted, then all those future gains and all the taxes you would have paid will not be required. It's just a good idea to have that conversation with your advisor.
Okay, say I'm a retiree. I'm concerned about healthcare costs. What do I need to do to kind of prepare for these changes?
Well, you need to be very concerned, especially with what's happening to the tweaks to Medicare. I'm seeing even commercials now for people that were receiving certain medications or using certain medical devices that they're no longer going to be approved, that they're going to have to make adjustments and go with more generic or probably lower cost type of devices. So people need, if they have HSA accounts, they need to be looking to maybe put more money in those HSA accounts now, where they can take out money tax-free to pay deductibles, to pay for, maybe they don't want to go with the lower end medical devices or maybe the generic drugs. If they want to continue to receive the benefits they're receiving before, they might have to come out of their own pocket. And so they need to be looking at how these changes to Medicare and their health insurance could affect their bottom line in their pocketbook.
Okay, let's wrap up here with a broader question. With all these changes, Medicare, Social Security, healthcare, taxes, what's the one thing that retirees should focus on just to make sure that their plan stays on track?
Well, the first thing they want to do is just look at their their current budget. Look at where their money's going. Okay, if you're spending money right now, you have your Medicare, you maybe have your Medigap, Medicare supplements, whatever type of program you're using, see how you can leverage those programs to give you the most benefits for the best cost. You also need to look at your investments, because you may not be taking money right now from your investments. You may need to look at working with your advisor to come up with a strategic plan to start a distribution process to make sure that you'll meet your medical needs and your income needs in the near future or in the far future. Like I said, we mentioned Roth conversions. If you have a sizable amount in your retirement plan or in your 401k or in your any type of annuities you may have gotten after retirement, you need to have conversations to see if it makes sense to start converting that over to start paying taxes under today's tax rates instead of future tax rates, which could be much higher. So these are conversations you want to have with your advisor, but these are conversations you want to have with your spouse or family members regarding the current cost of your health insurance, the current cost of your supplements, and to see how the new bill will be affecting you and now and also into the future. So that way you can be properly prepared.
Mark, as usual, thank you for letting us pick your brain and covering the big, beautiful bill. If anybody wants to find out any more information, just visit mahfinancial.biz and get a hold of us. All right.
Thanks, David.
Thank you for listening to Retire Rich, Tales of Financial Freedom. Have questions about topics covered during the show? Visit our website at www.mahfinancial.biz or give us a call at 956-994-0407. Don't forget to click the follow button to be notified when new episodes become available. Investment advisory services and financial planning services are offered through Simplicity Wealth LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm, nor does it indicate that the advisor has attained a particular level of skill or ability. Insurance, consulting, and education services offered through M.A.H. Financial. M.A.H. Financial is an unaffiliated entity from Simplicity Wealth. Clicking the like button does not constitute a testimonial for or an endorsement of our investment advisory firm, any associated person, or our services. Clicking the like button is merely a mechanism to circulate our page. Like is not meant in the traditional sense. In addition, postings to our page must refrain from recommending us or providing testimonials for our investment advisory firm. Because the SEC and state securities regulators generally prohibit testimonials, any such postings are subject to swift removal.